Hey guys, it's Warren Taryle, the tax strategist, and we get together once a year about this time to talk about payroll. I know one of your favorite subjects altogether, right? Payroll is one of those things that just excites everybody. Well, excites my guest today, Stephen. Stephen Harris. Some of you guys remember him if you've been around for the past few years. Stephen is the operator of Journey Payroll, which is our choice payroll service company. Some of you guys are writing out there, taking on all the risks and doing payroll yourself, or doing something really dumb like using QuickBooks or whatever for payroll. Please, and you'll see after we talk a little bit, please use a professional. Might be slightly more money, but only slightly, really. But as soon as something gets screwed up, they instantly become way cheaper. So definitely suggest talking to Journey Payroll before we go on. And this year is a really exciting year for payroll. Usually we kind of say, all right, we're going to kind of tell you the same stuff you heard last year. And you still need to listen every year because some of you need to hear it over and over again to remember, especially if you have an S corporation. Year-end payroll is crucially important to listen to, and we're going to talk about the things that you need to have at year-end payroll. But I thought let's first start off because this year there are a few little things that are payroll sensitive that have changed with the one big beautiful bill. I really wish I didn't have to say it. I wish they would have come up with something shorter for it. I don't like saying OBBBB. Let's just call it the bill. So yeah. There are a few things. Some of these may affect you, some of them may not, but let's get these out of the way and know what you need to know for payroll with the under the bill.
Yeah. Hey, Warren, I always love jumping on with you every year and having this year-end chat. You do such a great job with your clients, and we have many mutual clients together. And so, especially if you're an S Corp or if you're hiring employees, W-2 employees, payroll is a big part of your business and one that you definitely want to get right. We've had our fair share of clients come to us and you can call us kind of, forensic, if you will, cleaning things up that they may have messed up on throughout the year. But to answer your question about the one big beautiful bill, there were a couple of items, payroll related items that were included in that. And that really has to do with when you have staff paying overtime or tipped employees. There was a no tax on tips type of clause in there, and same thing with overtime. However, it might not be exactly what you think. It doesn't necessarily mean when you pay someone tips that I'm just not going to tax them. I don't have to worry about that. It's more of a deduction that's recorded on their W-2. And then when they file their W-2 with the CPA, then they can take that credit and lower their tax liability. So as the employer, if you're paying employees with tips, you're still going to record it and you're going to be taxed Social Security, Medicare, federal income tax, whatever you're normally reporting. But then when that employee gets a W-2, it'll break out how much they earned in tips. Same thing with overtime. What's the amount of pay in overtime that you received? And then you can take that to your CPA and say, okay, this is the amount that I received. And then that'll lower the tax liability there. So you're not, as the employer, going to stop taxing those wages. You're going to continue doing what you're normally doing. Everything's handled on the individual level to lower that tax liability for that individual.
I always say you're not going to do anything like you usually do because usually you're going to do this at the last minute and throw it to something.
Yeah.
Unless you're working with Stephen's company Journey, you definitely please don't try to do this on your own or through QuickBooks because your employees will then come back to you once they go to H&R Block or wherever they're going to get their tax return done, and they find out they're paying tax on their overtime or paying tax on their tips, and they're going to go, I thought I wasn't supposed to, and they're going to say, well, it's not what your W-2 says. So then you're going to be scrambling because you're going to upset employees. It's going to be February or March or even April, and they got to get their taxes filed, so they're going to be coming to you at the last minute, and just avoid all that. This year, if you've never done it before, hire professionals. I'm telling you, they're making it more and more complicated. Stephen says they're real cool and collect about it, but they're making his life a little bit harder, but that's okay. With
a little bit. Yeah, been in the payroll industry 18 years between ADP and my the business that I operate now, Journey Payroll, since 2017 out here in Phoenix. And it's interesting. It never fails. We get clients that come to us from, let's say QuickBooks or something. And actually I'm working on one right now where they set up 3 new hires, and they're like, I don't know what Social Security and Medicare tax is, so I'm just going to mark exempt from that. I'm not going to do that. And so QuickBooks allows you to make these elections when you don't know what you're doing. And quite frankly, it kind of messes up your W-2 wages and reporting. And so we're cleaning all of that up, backdating some wages and going to pay in all those taxes to bring in their year-to-date current. But they eventually cried uncle, and they're like, I don't know what I'm doing. I need someone to help. And so a local company here in Phoenix reached out, and that happens to us every single year. We come in and help them clean that up and then get them going off on the right foot and solid foundation. I love working with small businesses. It's a lot of fun, especially solopreneurs. We can't forget about our single owner S corps, or maybe hiring their children and what those strategies are, because it's a little bit different in how we operate and run their payroll. It's not always traditional biweekly or weekly type of payrolls. Do taxes only or cashless payrolls, which we have many mutual clients with you, Warren, on that strategy as well.
One last pitch, and then we'll talk about payroll again. One more reason to use professionals is of all the IRS penalties, payroll-related penalties are the highest and most severe, hardest to get waived, pretty near impossible to get waived. So pay one IRS penalty for payroll, and you paid Journey payroll for probably 3 years. Just
probably, yeah.
Is. So let them pay the penalty if they manage to screw up, not you. So put it all on them. That's the last one. So let's talk about different kinds of payrolls that we're talking about. And Stephen brought up, and it's another reason why I like them is they understand the strategy when we talk. Like right now, we're doing a lot of year-end planning with you guys, and one of the things we're doing is saying, here's what payroll needs to be. And for a lot of our clients that have S corporations, you haven't paid yourself a paycheck all year. That's fine. You've been taking bonuses out. And then when we're working, we're calculating a few things. One of the things we're calculating is really what you should have as a reasonable salary, right? When you have an S corporation, we save on self-employment tax, but the deal is that we agree to pay ourselves a reasonable salary, right? So now is the time to make sure we pay that reasonable salary. It's really hard to argue with the IRS that 0 is reasonable. Some number, if you give yourself some number of payroll, at least that gives us a place to argue to say that's all you're worth, that you really don't do much. But 0 is a harder number to go from. So, and it's really easy for the IRS to check this. So on the S corporation tax return, the front page, about the first expense we get to when after we put all the income down, the first expense we get to is owner's wages. We break that out from the rest of your employees so that the IRS can see whether you paid yourself or not without digging very deep. So they look at that. Back about 4 pages back, there's a line that asks, what distributions did you take out of your S corporation? Remember, distributions, you just take money out. You don't go through payroll. You don't just write yourself a check, transfer the money, whatever you're going to do. There's no payroll taxes or anything associated with that. And so they'll look at that and they'll say, 0, $100,000 of distributions, we think maybe there's something wrong here. And we're going to take that $100,000 and now declare it to be payroll. And now you're going to pay some penalties and interest on all that. So what we want you to do is make sure we're talking and make sure we're paying yourself a reasonable salary, not 100% of the profit, but a reasonable salary. So that's one of the things when Steve says a 0 paycheck,
cashless or taxes only payroll. Yeah.
Taxes only payroll. Sometimes we'll say, hey, you should have paid yourself $50,000 in salary this year because that would be what's reasonable. So now we want to go to Journey and say, I need you to prepare a payroll as if I paid myself $50,000 this year. Oh, by the way, I don't want a check for $50,000 because I've already taken that money out as distributions. So we're just simply, when we do your tax return, just going to reclassify some of those distributions as salary. And then, so all we need to do is pay in those related payroll taxes and some withholding. So if you say cashless, they know what you're going to mean when we're talking these strategies. You go someplace else online, I'm not sure they're going to know what's going on, and they're going to understand that strategy exactly the way we do. Now, there's a couple of other things we want to do to it. sometimes a lot of you guys were talking about doing defined benefit or defined compensation plans where you're doing retirement benefits. And if you have an S corporation, your retirement, the amount you can contribute to your own retirement is dependent upon how much salary you take out. So the IRS has got that little frog and it's like, all right, we're going to try to get you to take as much salary as we can make you take. Because the less salary you take, right, the less payroll taxes you pay. So they're going to use all their tricks to get us to pay more. And one of those tricks is, all right, if you if you want to do retirement benefits, those are going to be based on your salary, and it's a good trade off. So I say trick, but it was really a good trade off to do. And when we're talking at year-end planning, or if you decided you already want to make some retirement benefits, know that you're going to have to do payroll for that. If you're doing a 401k, it's something your payroll company definitely needs to know about, because they actually lower your W-2 by the amount that's going into the 401k. So that's something you need to talk to them about in advance. The other
Yes,
thing,
that is a common thing that we always ask our clients, like, hey, if you made any retirement contributions, please let us know earlier in the year or as you're making them, because oftentimes clients won't actually, they'll be running wages maybe monthly or quarterly if they're not doing the zero payrolls. And then they'll say, oh, by the way, we contributed $23,000 and $500 to my retirement account, and I only need to run $10,000 or so in wages for Q4. And we're like, well, shoot, we got to be able to deduct this from your wages. So we have to go back as far as we can and reverse wages, amend tax returns, and clean that up for them in order to properly report. So that, in order to eliminate any processing fees or charges, or kind of make it a smooth process for yourself and for us, if you are making retirement contributions and taking and we're processing wages on a quarterly basis, make sure to let us know about those so we can record them as you're contributing. But as Warren said, if you're an S corp and you're just taking distributions and draws throughout the year and we're filing zero tax returns, we can do a lump sum December payroll and categorize all of those, recategorize those distributions as wages, your $50,000 salary, and then deduct the full 401k retirement contribution. So we're all good there. But that is something that clients will call us in January and say, I got my W-2 or a copy of it, and I forgot to tell you about my retirement contributions, because they don't know necessarily.
what they do is first they send us their W-2. We do their tax return, and they go, I don't see where you deducted my 401k contributions.
Right.
It's like, you didn't have any.
Wasn't reported.
Sure.
Right.
So definitely communicate. It's a great thing. Very easy to communicate with them. The other thing we want to add to your payrolls is huge. Every year I say it. Every year, half of you hear me say it. The other half, it goes in one ear, not the other. And it costs you money for not doing this. And I will say this. You guys who listen to this video, you guys do it right. It's the other guys who just think they don't even need to listen to this, that they're the ones who screw up and they leave a lot of money on the table. And that's health insurance. So if you're doing health insurance, if you have a Section 105 plan, any of these employee benefit things that you're doing, we need to get it through payroll, especially health insurance. So health insurance, the way it works, it's screwed up. I know I didn't write the rules for it. Stephen didn't write the rules for it, but for you, not your employees, but for anybody who's 5% of the company or more, if it's an S corporation, whatever you and your family's health insurance contribution or premiums were, we need to add that to your total payroll. This is actually a good thing. And I'll explain why it's a good thing in a second, but we need to add it to your total payroll. You don't pay payroll taxes on it. That's why it's a good thing. So let's say you have a $50,000, we decide $50,000 is reasonable for you. And then you tell me, oh, I had $25,000 worth of health insurance expenses. One of our options is to say, that we're only going to do $25,000 of payroll, actual payroll, and then $25,000 of self-employed health insurance. So that shows up as $50,000 as wages on line one of your W-2, but you only pay payroll taxes on $25,000 of it. So it's a way we can get some free reasonable compensation numbers. So that helps us out a lot. And then when that $25,000 gets to your personal return, we get to deduct it then. So it's a perfect solution. Sometimes we just add it to the top. But here's the thing: if we don't put your health insurance on your W-2, you can't deduct it. Your company doesn't get it deducted at the S Corp level. You don't get it deducted at the personal level. We might be able to make it an itemized deduction for health, for medical expenses. Most people never get that with all the limitations on it, and with the standard deduction being so high. Please, if you don't do anything else year-end payroll wise, get the payroll company to know what your self-employed health insurance amount was for you and your family, even if that's your only payroll you're going to do for the year. And I don't recommend that 100%, but if you, again, any payroll looks better than zero payroll. So if your only payroll is the $25,000 worth of health insurance, get with Journey and get that on your W-2.
Yeah, and what you're saying, Morin, correct me if I'm wrong, you're saying that the S Corp owner, the business is paying the health insurance premiums for their family plan. So,
Right.
United Healthcare, Blue Cross, whatever your, whatever carriers you work with, there's a monthly bill and a premium that you pay. Your LLC, your business is paying those premiums, not you personally. And so what you do is you record those premium amounts, those business expenses, as income to the S Corp owner. And I believe it's a 2% shareholder or more.
Right.
And then you record that as wages, and that goes on your box one, which is what the IRS looks like for reasonable salary, but it's not taxable for FICA, which is the payroll tax, Social Security, Medicare. So we can do that as just a manual entry in our system, put in 25,000 as S Corp health insurance premium, and exempt federal and state income taxes, because maybe you've been making estimated payments for those withholding taxes, and there's no Social Security, Medicare. So it's just a manual entry on our end, and it gets populated on your W-2. So that way you can take that expense and that deduction when you file.
Right. So definitely, we still want to show some other salary just for other reasons, but it gives us extra. It gives us extra. And again, if that sounds like it's Greek to you, you don't do your own payroll.
Right.
So we definitely, please, if you get nothing out of this, out of this call, if you pay for any kind of health insurance, and I'll get a little bit aggressive for it. So even if this is something you're paying for on the exchange, right? So you're a solopreneur, you don't have a group policy, and you've gone out to the healthcare exchanges and you're paying premiums there. It's okay. Give that number to payroll. We'll fix it on your books. All right. So let's take credit for this. If you're a sole proprietor, I should have said this in the beginning. If you're a sole proprietor and you don't have any employees, you can stop listening. So sole proprietors and partners in a partnership are not allowed to give themselves a paycheck. So you even, no matter how much you want to, it's against the law to give yourself a paycheck. So don't give yourself a paycheck if you're only a partner. I should say only, but if you're a partner or a sole proprietor, you don't give yourself a paycheck. You give your employees paychecks, but not yourself. So we're talking S Corps and C Corp owners here. So please get that health insurance on there. I'm saying it a lot, I know, but you don't believe how many people we lose, $10,000-$15,000 in extra tax that we could have saved if they would have only put that number there on their W-2. So it could be big, and it's free. So Don't give it up. The main other thing that we really like to see, it's not as drastic, it's not as bone crushing as missing the health insurance, is your personal use of your auto. So if your company, your S corporation, your C corporation, you're driving a company car and the company's paying for all the expenses and we're deducting all the expenses for your car, most of us don't drive that 100% of the time for business. Right? There's some personal use. And, if we've talked over the years, we've talked about personal use, and you should understand this. So the personal use of that vehicle, the best way we can handle that is by adding it back to your W-2. So when you're doing your year-end payroll and you're talking to Journey or whoever's doing your payroll, you're going to let them know, here's my self-employed health insurance, and here's the amount for my personal use of the car. And we can do it as simple as, okay, I drove my car 80% for business, and I'm looking and I'm going to make my math easy, $10,000 worth of car expenses. So tell them I had $2,000 worth of personal use of car. And you just need to let Journey know that it might be off a little bit, right? Because you're contacting them now in November and December. Don't wait till December 31st so you have the exact numbers in and your bookkeeper's had time to run all the numbers. That's okay. Get us close. That's all we need to do. Get close. Well, give that number to Journey and they'll get that onto your paycheck, which also helps with reasonable compensation. And in this case, it helps us also for retirement benefits. So it's just a way to do it. If you don't do it, we have some workarounds for it. It's just that much not as good.
Yep. Yeah, we can record that on the W-2 just like any of these other benefits. And those are the big items is at year end is the health insurance, any retirement contributions, personal use of car. How do we want this W-2 to look to maximize your deductions and maximize your income without too much tax? And that's where the strategy comes in with you guys. And we're always happy to help.
Anything I'm not thinking about that year-end stuff or things that you wish we would have told our clients before they call you at the last minute? And
yes, by December 15th would be ideal. We do have last minute setups and new clients that come in every year in December. I would just say if you are a partnership or you are a sole prop and you're not sure or fully understand the S Corp election or the strategy around that, definitely have a conversation with Warren. Basically, it's if you're a sole prop or a partnership, any of the profits on the net income you have at the end of the year is a pass through to you personally, and you're taxed at that full 15.3% of self-employment tax on those profits on top of your regular federal and state withholding taxes. So when you make that S Corp election and you set up the reasonable salary, that self-employment tax goes away off of your profits because now we're taking the reasonable salary, deducting that as an expense. Yeah, it shows a little bit lower profit, but you're eliminating 15.3% in self-employment tax, and you're only paying payroll tax on the reasonable salary portion, which is the exact same percentage, 15.3% in Social Security, Medicare. So the strategy is you could potentially save, if you're doing $100,000 in profits, you can save $8,000 in taxes by just filling out one form and making the S Corp election. Now, what we've also seen is partnerships. They may have employees and their partners. There's two partners. They have a couple admin or maybe a couple of employees that they're paying salary to. We'll run payroll for the partnership, but then each partner has their own S Corp. They have their own S Corp that owns the partnership and not themselves personally. So that adds a whole nother layer of strategy where the partnership pays a guaranteed payment or a distribution or whatever to the S Corp, each owner's own LLC S Corp, which is considered revenue to their S Corp. And then they can set up the reasonable salary out of their S Corp LLC, which it all funnels through the accounting side. Warren's the expert in that, but it definitely allows each partner to be creative, like putting their kids on payroll or setting up retirement contributions in different ways, not necessarily based on the percentages that they own in the partnership. So it allows a lot more flexibility and operate independently for your families and legacy and whatever it is you're trying to do.
And keeps your partnership alive longer. It's one of our favorite strategies because basically you're going to allow each of the partners to make their own individual decisions on a lot of things and not affect the other. So I've just learned from experience, having my own separate company from when I had a partner allows just more freedom and me to do things and not have to ask my partner's permission for stuff and make them, question anything. It just keeps that friendship alive longer.
Yeah, because if you own 30% of the company or 50-50 or whatever it is, your partner, your LLC now for yourself owns that percentage of the partnership. and you're both getting paid based off of the percentage of the partnership, whatever you're owed. But then whatever you do within that S corp that is being paid by the partnership for your services, you can be creative and do whatever you want. Like, as you said, Warren, you don't have to ask your partner for that because they have no ownership in your S corp. It's a great strategy. We've seen companies come and they've been partners who were set up as an S corp, and then they revoked the S corp to then set up their own LLCs to become and elect their own S corp. So I know you've helped us with that sort of thing to look at the strategy in a holistic approach and what makes sense for each individual and each business. And then when you're ready to run that reasonable salary, we're able to jump in and help on that piece. But yeah, this strategy stuff, it definitely gets complex, but it gets a lot of fun in at the end, right, trying to save a bunch of money in taxes. As your sign says in the back there, Warren, paying your fair share is for suckers.
And yeah. And so on all these strategies, and again, I'll throw it back to you. As you can tell, Steve and I like each other a lot, mainly because we can feel comfortable coming up with all of these strategies, knowing that services like what Journey does has our back and it's going to have your back. And some of these things I hesitate to suggest to people because it has to be done correctly. But if I know it's something we can refer off to Journey to help with, I don't worry about that. So how do people get in touch with you, Stephen? Or how do you get in touch with Journey? You don't necessarily have to talk to Stephen. He's pretty brilliant, but and I should say his team is better than him. So I get to talk. Yeah. Diana gets to work with the team all the time. It's just so much easier than it used to be when we had other companies.
Yeah, we've got a great team here in Phoenix, but we're nationwide. So any Warren, any Taryle accounting client we can work with, and all across the country. You can reach out to sales@journeypayroll.com. You can also reach out to me directly, 480-415-8693. Feel free to text or call me. I'll get you in touch with the right people. But yeah, every client's going to have a dedicated client success specialist on my team. They fully understand the cashless or taxes only payroll. I cross-train everybody on my team to understand this strategy. You're not going to get a 1-800 number or anything like that. But it is a great way to, as Warren said earlier, to reclassify your wages or your distributions as wages. And you don't need a full $50,000 to pay yourself. We're just going to report 50 grand, calculate taxes, deduct the rest. So it's a net paid zero, and then pay in the taxes for you so that your W-2 looks like you had a $50,000 salary. So my whole team is well-versed in that. They're phenomenal, great to work with, and I appreciate the kind words there, Warren. We love partnering with you and Diana.
Let me throw one more thing out. This is going to be out of the blue, so I don't know. Maybe we edit this in post. I always wanted to say that, but Stephen also has. So Stephen's a phenomenal entrepreneur. So I mean, he understands payroll, but he understands the entrepreneurial world is very much has his pulse on what's going on in the entrepreneurial world, and has a phenomenal podcast. So if you want to throw out your podcast for people, totally you should listen to it. If nothing else, it's super inspiring.
Yeah, appreciate that. So I've been running, it's called the Success Flow podcast, and I have a co-host. His name's Phil Crawford. We've been running for 2.5 years now. Every single week we publish an episode, and it really is all about life and professional, career, vocation, personal, and it's just helping our listeners define success for themselves. Everyone has their own perception of success and what they're trying to build and their pursuit of excellence. And so we share ideas, highlights, frameworks, philosophies, and everything that we kind of learn about into the world and transfer it into the podcast world for listeners to gauge, what makes sense for them and how to build that life path. And, I'm also involved in helping solopreneurs and small businesses launch their own virtual podcasts. And so there's a lot of really fun things that I like to do in the small business community. I'm an advocate for entrepreneurship. And so if there's anything I can do and be a resource for anybody, happy to help.
Cool. That's great. How they find it? You can just find it wherever podcasts.
Yeah. Success Flow podcast. You can search on Spotify, YouTube, Apple, anywhere you listen to your pods, but it's Success Flow, FLOW, all one word, podcast. And you should be able to find us there, hosted by myself, Stephen Harris, and Phil Crawford is my co-host. So we get to rap back and forth and have cool guests on every once in a while as well.
All right. Well, cool. Thank you so much for doing this again this year, Stephen. Thank you for being a fabulous guy and bringing Journey to us.
Absolutely. Thanks for having me on, Warren. Looking forward to working with you and having a stellar year end again as well.
Hey, and everybody have a great new year, because you're probably listening to this near the end of the year, and happy holidays, all those kinds of things. And all those things are all on our minds. Right now it's middle of November here, so we're facing like 3 weeks worth of holidays coming up before the end of the year. So it seems like we have time, but there's a lot of people who are taking off, so we got to get these things moving if you want to do payroll and if you want to do year-end planning. All right. Thanks again, everyone. Thank you, Stephen, again. And
Of course.
hopefully we won't have to wait till next year to see you. See you soon. Bye.